Hello everyone. So I haven't done any scans today just yet. AEXR looks very promising. Monday, um, it closes below the 9 EMA, and also this is a bearish engulfing candle. I'm trying to push higher but failed and rolling over. But Tuesday we got a high volume breakout and a really strong green candle right here, and it's trading nearly like $500 million volume yesterday with a market cap of 3.2 billion, more than like 10% of its market cap. To me, it's a really good sign on 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 the bullish side. Either we got a very strong bounce off the weekly 50 EMA. Lights also really strong bounce off the 150 EMA on the daily chart. Now yesterday it closed above the 50 EMA too. If it can stays above the rising 9, that could set up another uptrend. Maybe, I don't know, maybe still too early to say. AMD is also really strong, showing relative strength during the pullback and outperformed the semi ETF as a whole, and also I think among the strongest stocks within the sector. A little bit extended on the weekly, but if the market really decided to like start another uptrend, it can go much more further extended than we can expect. This HUD is also doing pretty well, already above the weekly 9 EMA. So we got lots of the data center names showing up in today's screen, today's scans. So many people ask me how to spot the next leading theme or the leading stocks. I think today would be a very good example. Like if data centers continues delivering the strength, it's really it is showing pretty decent relative strength, especially on the bounce from the past few days. Looks pretty good, and not only one or two, like there are already like 5 or 6 names showing up today. Like although I'm not trading them, but from today's scans, we can also tell like the biotechs or the medical, like it should be the XLV healthcare, healthcare sector, and also like the oil and gas sector is also the leading sector right now. And Rivian looks pretty decent today. Tesla is weak, so definitely not in the leading sector or the theme right now. But I think it looks really good. I just couldn't resist it. Dash is also looking pretty tight, flagging above the previous highs, or you can see near the previous highs. But it's above all the 150 EMA, the 50 EMA. It's not in the like maybe in the like a software theme. Yeah, but I'm just not a fan of trading it. It's a little bit too slow and doesn't have much like storytelling narrative. Palantir is also flagging near the 50 EMA. Can go either way. Yeah, we will see. CBRS is yesterday is really strong. It's breaking out from the previous, like it's like building the double bottom base and recovered from both the 9 and 21 EMA. So yeah, I think from the scans and from running through different watch lists, still we have a lot of stocks in a really really strong downtrend, like intermediate downtrend below the 9 EMA. Uh like Corning is the one of the best examples, still look really weak. At the same time, there's some stocks that is showing uh relative strength, could have like may lead the next leg up. Yeah, and I think I'm not very bullish, nor I'm very not very bearish. I don't know. At one right now, I don't see much like a good um opportunities on the long side, but at the same time, for the short side, I also don't see much. Like a lot of them are pretty extended into the downside, reaching for the weekly support, like the weekly 21 or the weekly 50 EMA. So yeah, not seeing much right now. Not don't have a really strong opinion, or like a yeah. I don't think either long or short. I don't see a huge edge or like potential risk reward right here. I think the market is still a little bit indecisive, and I don't know. But yeah, and for my longs, I have like I tried some cybersecurity stocks on Thursday, but I got stopped out yesterday. But I re-entered on net and this Pan W yesterday. Today they are gapping up interestingly, and while the market is gapping down, so we'll see. And yeah, crypto names are put it on Monday. MSTR is the first one on this breakout of the previous day high, I believe. Like yeah, should be right around the previous day high. BMNR is also a similar play, but it is gapping up, so it is actually doing better at the open. And coin, I put it a little bit later in the day, when yesterday it's actually outperformed MSTR and BMNR. So maybe I will explain a little bit more in the later. Let's focus on the open. And Hood is one of the a really good weekly looking stock. Yeah, good looking stock on the weekly. Right, breakout and a retest on the anchor VWAP from the all-time highs. Also, the high of this base, if you consider this as a base, 9 months, around 9 months. CBRS, really impressive, especially on a red day. And yeah, and having this kind of breakout and of an IPO name is definitely a good sign on the market breadth and the strength too. So yeah, gonna monitor this thing. Let's see whether it gives a pullback or any potential entries in the coming. Today's entry would be at the 5-minute chart, or just maybe a 60-minute 9 EMA pullback. But this is like, yeah, it's a really aggressive entry. Even on the 1-minute breakout, you have to like maybe like it's still around 1.5%. 1.5% stop, and hard, yeah, pretty hard to catch this one. And we're also seeing like seeing Dell, Nebius, AMD is doing really well today. MU is also looking pretty good on the daily. All the EMAs are really close to each other, and yeah, definitely a little bit. I am not a fan of yeah, this huge volume days. But generally, it needs a little bit more time to build the base. Now, if we got some volumes expansion in after the huge uptrend, a long uptrend, and yeah, I think MU I think most likely if it breaks out successfully, it's gonna like finding some resistance at this unfilled gap level, or maybe near the previous high levels, and then we got a second dip, the second pullback, and then build a longer base, a larger base for another uptrend to start. But I like everything can happen, so I think I'm still gonna take MU if it sets up tomorrow or in the coming days. There's also a chance for this to break out right here and then like continues higher without stopping. ICHR, good entry with 1 minute breakout. Yeah, and I particularly like the pullback into both the 9 and 21 EMA on the daily. And the second thing that I really like is relative strength compared to the semi sector. And the third one is today at the open, the semi ETF, the SOXX is gapping lower. So it's opening red. ICHR is opening green and gapping down into the support level. And I think it makes the odds of this pullback trade a little bit higher. Definitely not a liquid name, but yeah, I think that this concept can apply to many other stocks, and I think if a similar one would be AMD. So AMD is also gapping down into the daily 9 and 21 at the open. HPE. Yeah, I think today is a really good entry. But from my experience, generally for like a blow off top like this, huge volume candle with extension on the upside, volume expansion, and we got the 50 EMA pullback. Maybe in this needs a little bit more time. We may see another leg lower, like the third lower higher lows. Sorry, the third higher lows before the breakouts. Maybe, yeah. But no matter what, today is still a good and a really good entry, and the weekly looks very decent too. Well, I think I can go back and talk a little bit more about on the cryptos entry. So on Monday, and also actually it's during the weekend, preparing for this week's trade ideas, and also analyzing the trades in the previous weeks. So one thing that I noticed is the crypto Bitcoin and Ethereum starting to find support on the rising 9 and also the rising 21, and the 9 just crosses the 21 a few days ago. And yeah, Ethereum is a little bit stronger than Bitcoin, so it keeps building higher lows and serving the rising 9 for 4 to 5 weeks. 4 weeks, 4 weeks. And when you zoom out on the weekly chart, so Bitcoin is at the previous, which is 2021 and 2021 highs, around like 60k to 65k level. And on this weekly bar, like late June, we try to break down from the previous swing lows, but in the next week, a week later, it reclaims the previous lows, and we haven't violated this candle low for like 2 months. 2 weeks, and this is the third week after this reversal, after finding support of this low. And I think I really like this type of shakeouts. It tries to break slower, but it fails at a weekly or like, I don't know, monthly key level. And I think it would be a really good, like a possible turning point, a possible level that forms an uptrend, or at least found a stronger bounce, maybe into the weekly 21, maybe the weekly 50. So yeah, that's the big picture. Like, that's what the context behind the cryptos trade. And so at the open, I think I bought the MSTR probably opening range highs, and almost stopped me out intraday, but it didn't. Also bought BMNR. I think I got stopped out on this one once, but I rebought it again on a 5-minute breakout. So it works okay. And coin, I think, is the entry is similar to the BMNR, maybe a little bit later, but like this is the 5-minute breakout and breaking out from this range, intraday range. Yeah, so it's like I think that kind of concludes the entry on the cryptos names. So just got stopped out from Hood and Rivian, and notice that the Qs and the SPY is still under the 9 EMA, and definitely we could see a bit of chop here, although like today's action is pretty bullish in my opinion, but we need to see the further confirmation. So that's why I believe I will keep trying new positions if there's like any opportunities in the coming days. If the Q is starting to find rejection at the 9 EMA right here, and then closes really weak, I don't know, it may suggest a deeper pullback or a longer chop below the 50 EMA. But I think as like MU is doing pretty decent, like Dell is still doing pretty decent. So if we see a 1 or 2 red days in the coming week, as long as they didn't violate, like the MU isn't like falling below the rising 9, or maybe filling this gap around 915 to like 900, like this level. If MU can stay above this gap, I will keep looking for the long side. Yeah, a lot of the names are doing very fine. And Rivian, this one is a really good example for the re-entry, although I got stopped out a few minutes ago. But it falls right back into the anchor free web from the swing high. And also the EMAs on the lower time frames. Like all the EMAs are right here. We may also argue that like it's also the daily non-EMA. So yeah, although it takes out the low of day, but I mean there are a lot of examples in recent years, like when it loses the low of day and found support, it could be the fake out and really shakes people's out. I don't know whether like the institutions or the like the market makers are benefiting from that. But yeah, I'm seeing like a more and more examples, higher and higher frequency of a stock taking out the low of day and then rallying back into the highs. And most importantly, like Rivian is at the support levels and multiple support levels, and also like the daily non-EMA is like it's doing really fine. It's not like, and maybe it's like better to like shake those breakout buyers first and then I don't know, going high without them. But yeah, we may need the market to cooperate a little bit. If the market continues to fall, then probably Rivian is going to follow. ANET last week candle was strong, bounced from high. Would you consider to entry today opening? Yeah, yes, I think it makes sense. The weekly looks pretty decent, although it's a little bit choppy for the past few months. So probably it's not a easy stock to trade. I mean the entry is pretty solid. At on this anchor free web from the red candle, breakdown candle, or the distribution candle, and found some opening at the 21 EMA. Also the gap, the unfilled gap on Monday, it's just a little bit too choppy and maybe a little bit too slow. But I mean it has the potential, and technically is really decent. I'm not sure whether it's on the right sector or not. What's your thoughts on potentially shorting Riot, Heal, and the course failing the declining 50 EMA? I think it's a really good question, and I also got asked by a similar question uh on Twitter, on X, from a DM, and just a moment, I think it worth to share with you guys. CBRS pulling back into the 60. Wow. I mean it's doing fine. And because I'm not in it, so I think it's a good. I think it's looking pretty decent. Definitely, it cannot be like closing too weak. So if it closes red today, then definitely it's not a good sign. But I think if it closes somewhere near the anchor free web, that would be great. Or maybe it holds up it holds up the 9 EMA on the 16-minute chart. That I would still consider is doing fine. Yeah, so that's a question on Twitter. So he had a question on shorting. So when shorting bounces in a weak market like now, how do you separate the shortable bounces from the ones to skip? I think this is a really good question because I've also struggled with that, and it also contributes to the 26% drawdown in December last year, and also like the choppy market back in maybe January last year too, or November last year too. So I think it's a really good question, and he gave an example like light felt its reclaim on 20th of July, which is Monday, and gapped up this morning, which is yesterday, as it reclaimed the 50 EMA. How do you manage a short that gaps up past your stop overnight? And overnight gap ups on my shorts have been killing me, and I'm confused on what I'm doing wrong. And I really think this is a really common scenario that you will eventually come across when you start trading pullback, and especially the pullback shorts, because like shorting, you definitely have a higher chance of getting a gap up, or like higher chance of failing. I mean statistically, because like generally the market maybe like 70% of the time is going up. So yeah, and I think my answer on this question, I think I have like several points to elaborate on this question. So the first thing is shorting on Monday. So Monday, light is gapping up into the like above the 9 EMA, below the 21 EMA. But if we look at the Qs, so the Qs on Monday is well below the 9 EMA. It is not even touched the 9 EMA on the daily charts, and so it's a little bit extended into the downside. Also, on the semi ETF, the StockX, it is also a little bit extended from the declining 9 EMA. So I think this is one of the major reasons that shorting on Monday would have a higher chance of failing. So when I enter a trade, most of the time I would consider the big picture behind, or the context behind. And as we all know, like if you probably would heard about this many times, like 70 or like 80% of the stocks would like follow the general market's direction. And when the market or the overall sector ETF, overall sector is extended into the downside, so and it's actually only like it's only at the 9 EMA. If you guys have like read my tweets, my posts on Twitter about shorting, like shorting at the 9 EMA has the lowest odds of success. Yeah, it has the lowest win rate actually, because like the 9 EMA is the fastest moving EMAs, and like a pullback can definitely goes beyond the 9 EMA, like on maybe on the 21, sometimes even going back to the 50 EMA. Shorting at the 9 EMA only shorting every bounce into the 9 EMA is definitely not a good strategy, or not a good entry that we should use. And at the same time, light. So when the market and the sector ETF is still extended uh, from the 9 EMA, from a declining 9. So the market as a whole or the sector as a whole would have a higher chance of it continues bouncing up into the declining 9 or even the declining 21. And as a result, light would also have a higher chance of bouncing further higher when the general market or the sector continues to bounce, because most of the stocks will follow the general market and the sector itself. And yeah, and also light is also showing kind of relative strength compared to both the general market and the sector ETF too. And it also like puts the odds of shorting a little bit lower, and put yourself a little bit unfavored when you're shorting on Monday. I think it is my observation, or like my opinions on this one. And comparatively, like if I am shorting lights on Tuesday, on like on this candle, this bar right here, and on this day, the semi ETF is at the 21 EMA, or maybe the 9 EMA. So it is not extended into the downside. Pretty close to the declining EMAs, and also this is the yeah, at least it's not extended into the downside first as a whole, and the Qs is also at the 21 and the 9 EMA. So I think that it really makes the difference, in my opinion, of shorting on this candle versus on this candle. And there's also I think there's also the second reason. I think the second opinion from me is actually semi ETF for the sector as a whole, and also the Qs is actually still in an uptrend on the intermediate term. So leg up, and we are now going like sideways, or like we are pulling back. But it's definitely too early to say we are definitely not in a weekly downtrend, or like the weekly is still looking pretty strong. Still well above the weekly 21. Semi ETF barely reaches the weekly 21, nearly, and we can clearly say it is still in an uptrend. So if we go back and look at the uptrend, that especially a strong uptrend that the semi sector has made, or like the Qs has made, a lot of the times we get an uptrend, then we pulls back into the 21 EMA and rebounces at the 21, and then we start another uptrend. We start another leg up. And this is also a similar case right now. We're getting a pullback into the rising 21 EMA on the weekly, and this is like the first into the 21 EMA. And generally, or like most likely, market is not gonna like dips lower, like slices through all the EMAs and without any bounce, without any attempts on like going higher or like going sideways before the real leg down. Generally, it, for example, like that, even with a really sharp pullback on like the back in July 2024, really sharp pullback. This one maybe, yeah, with slices through all the EMAs, but yeah, I just think it's not it doesn't happen that frequently. I think it also really depends on the market context. As a lot of the names or lots of the leaders right now is at the first pullback into the rising 9 EMA on the weekly, or maybe the rising 21 on the weekly. Generally, we won't have a high chance of like failing it right away. If we really would fail it in the near future, maybe we need to have some bounce or like a building the failed VCP and then a breakdown. So yeah, I believe like the second reason that maybe I would avoid the shorts on Monday is the market is, or the sector pulls back, just pullbacks into a really strong weekly or weekly support level, or like the 21 weekly EMA, and statistically there's a high chance of this thing finding support and then continues higher. And yeah, but if we look at some like really a bearish case when the market is in a downtrend, so back in 2022, so we are in a bear market, when all the EMAs are trending lower, like maybe for example right here, all the EMAs are pretty close to each other, like they're clustered together. We got the lower lows, lower highs into the lower lows, and we just got a really bearish engulfing weekly candle here. I think the Qs is should be weaker, right? The Qs, maybe a little, I don't know, maybe hard to tell, but I think semi sockets is comparatively weaker than the Qs. But still, if we are talking about if we would like to short here, I think this is a completely different scenario, a completely different context compared to what we are at right now. Like the 50 EMA is below the 150, and we have already experienced a pretty weak downtrend for 3 months. And I believe back then, I think the market breadth is definitely not good at all. Like I think most of the stocks are in the stage 4 downtrend, like they're all trending below the EMAs. So this bounce, maybe you're gonna short this bounce into the like declining 21 or declining 9 EMA. I think like shorting right here is definitely different. Shorting when the market is like the 50 is well above the 150, the weekly trend is still intact. It's like well above the 21 EMA. So they're completely different market situations or market context. And I think it is really important to consider when you consider doing shorts, because I think shorts are definitely a little bit more difficult than doing the longs. And I think market context, the big picture behind, really makes the difference. Yeah, and the third, I think the last reason, or the third thing that I noticed on light is the Friday. It's the Friday candle, and generally I'm not gonna I'm not interested in shorting right after a strong candle or a strong bounce of the supports. Like it's opening lower, trying to go slower. It recovers all the downside, and even close near the high of the day and near the high of the previous day too. So yeah, I think this is a small details that that I would also consider whether I should like before I short the stock. But I think the major reason is like the prior to I think first is the general market extension, like the Qs and the semi ETF is not at this resistance level. It's not near at the 9 EMA. Like it's quite extended from the 9 EMA, let alone the 21. And the second is we're, I think on the weekly, zooming out on the weekly, we're still in a very strong uptrend. Like we're only pulling back into the rising 21. So I hope it makes sense. And if you don't agree, or if you have other reasons, or you have other observations on how shorting on Monday is not good. It's not good timing. I think it's really great to have different opinions and have your own thinking, have your own thought process to verify whether it makes sense or not. You shouldn't just like plainly listen to other people, other traders, and without digesting it or without your own thinking. So coming back to the question, course, Q, and riot off the 50 EMA. Let's leave the question to you guys. I think I'm not giving my answer right here. As I've just said, like trying to verify it on your own, come up with your own conclusion, no matter it's right or wrong. Actually, like doesn't matter whether you're right or wrong. Like the process of thinking, like analyzing, observing, like coming up with your own conclusion is much more valuable than the results, like whether you're right or wrong. Yeah, build your own conviction. What was the answer to your QCOM tweet? Yeah, I think that's what I wanted to talk about, wanted to bring up right now. I really want to clarify, like there's no model answer for, I think, 99% of the question related to trading. I think there's really no model answers. There's only I don't know, the best answer to you. Like there's only your answer. I think the answer like depends on different trader. Like the same question, different traders will have their own view, will have their own opinion, have their own approach. But they can be both maybe profitable, or like they can be both right. And so actually my first takeaway from this QCOM versus Nasdaq is actually how many traders, how many people really put the effort, really put in the time on studying, even though it's only like I don't know, it's only one chart. It shouldn't spend much time on this. And so I posted the tweet on Saturday, and now it's Wednesday, so already like 1, 2, 3, 4, almost 5 days. I count it as 4 days. So after 4 days, there are 14 people replying my tweets, and 3 of them should be spam. Like I can only see like 11 comments right now, and we got like 27k views from the tweets. So let's say only like 10% of the people is really into trading. They're really like kinda aspiring to be a good trader, but kinda would be a little bit serious in trading. So let maybe like only 2,000 people is really paying attention into this tweet, and so we got only 11 people is really replying to the tweets and like really doing their work. Maybe I believe like there are definitely some of the some of the people right there is maybe they don't want to like post their don't want to write something on the internet. They don't want to reply below the tweet. So I don't know, but still like 2,000 people, there are only like 11 replies. I am a little bit shocked actually. I think this is also the first time that we really have a representation, like how much or like how large is the percentage of traders that is really putting their work, even though it's only like a small study on a single chart. Yeah, I'm quite surprised actually, and I believe it's also explaining why the success rate of trading is that low. And yeah, you see, like I think most people won't put much won't devote the time and efforts into the study. And most of them are just maybe putting the time into during the market hours when they're pressing the buttons when the market closed, when there's nothing going on in the market, and doing the dump work, the tedious work. But I think at the same time, it's also a really good thing to realize when you're a trader that really puts in the time and efforts on trading, on the boring work, because you can see how small amounts of people is really studying the market, is really like trying to learn from the mistakes, studying the past charts, doing all the repetitive or like the work that won't stimulate your brain, that won't give you like the excitement or fun or the dopamine. So maybe, yeah, rather than listening to me, I think it's better for you guys to maybe to share your insights on this chart. Let's see what we could come up. And I'm sure, I think I'm gonna miss a lot, and I'm looking forward to some answers that I never think of and never noticed. And again, I believe like doing the works on your own by yourself is like much more valuable than listening to me, listening to a guy that just talks nonsense, and you won't remember it maybe like a few days later. So the volume pouring in at the top, yes, I think it is one of the most noticeable thing that really stands out from the QCOM's chart. And like when QCOM topped on the in January 2000, like on this huge red candle and also the candle before it. So we get the highest volume weekly candle since the uptrend, since the start of the rally. And I mean, it's like a crazy volume. It's trading at 20 billion. 20 billion US dollar back in 1999 or 2000. What's the weekly volume of Dell right now? 15 billion. 11, 12 billion. Nebius 19 billion. Like if this figure is correct, like you can imagine how crazy it is. Like 26 years ago, I believe back then, like the largest market cap stock, I'm not sure. Let's do a research. So from the AI, in January 2000, the largest market cap stock was Microsoft with 546 billion market cap. Let's see. I think on the same week, it is maybe a 2 weeks before QCOM topped, Microsoft also delivered a 19 billion weekly dollar volume weekly candle. And so QCOM is, I'm not sure how much is the market cap back then. So according to the AI again, is this QCOM had a market cap of 89 billion at the 3rd of January, I believe is where it topped 2000. Like 3rd of January, it had an 89 billion market cap and is trading at 20 billion weekly dollar volume. So it's around one fourth of his market cap. So I think it is also, it's one of the key takeaways. Let's see. What is SNDK's volume? So SNDK's volume is actually crazier. Back in June, it's trading at nearly 50%, nearly half of its market cap on the weekly chart. Yeah, maybe like today's we're getting a lot of like market makers, like which increases the volume, the turnover. We also got a lot of day traders, and we're also getting more like capital inflows from countries all over the world into the US market. So I think that also contributes to the higher turnover today. But still, I think SNDK's volume on the weekly candle is still very impressive. Yeah, again, on the SNDK, we are getting huge volume expansion and also the price expansion too. 65% above the 50 EMA. And it's up 51% in a single week after going higher for like already. If you consider this is the acceleration, or this is the last leg up, or yeah, it just keeps going higher and with like accelerating slope or like volatility. And I really cannot imagine how euphoric it is. Probably I would have like sold QCOM. I think I must have sold QCOM on this candle or this candle right here. I wouldn't believe it can like goes further, like 100%. It can double from this acceleration. Also the volume expansion too. Sometimes the market can go much more crazier than you think. QCOM actually put in the top first before the index turns, so a true market leader actually already showing weakness. I think it's also the second key takeaway from the charts. So being the huge movers, and Qcom tops in January 2000, while the Q tops in March. So the market keeps running for a few more weeks to a few more months before the real tank, before the huge reversals. And when the market still keeps going higher, Qcom is going sideways and failed to make a higher high, and then eventually loses the support and made a lower low. So I think it's also really a major takeaway from the charts that when the true market leader, I mean the true market leader topped before, could find top before the market or the index. And when we are seeing some weakness in the market leaders, then we may need to be a little bit more cautious. Like when they're really showing the relative weakness compared to the market, and also definitely showing the volume and price expansion. Looks like Qcom was the first one to top in the group. MSI, are we still getting the Motorola charts? Yeah, that is a good one too. Here is where Qcom tops. On Motorola, we also get a huge, strong reversal into the downside, but Motorola found support and showing some increase in volatility, like a huge wide weekly candles, and eventually managed to break out and climbs higher, and it tops almost at the same time with the Qs, but a few weeks, 2 weeks earlier. But you can definitely see the volatility really starts to picking up here when it's in the earliest stage of the uptrend. Like maybe here, like we got a pullback, we have a sideways, we build a base for around 5 months, 4 months. The volatility is similar to the uptrend, like when it's trending, and when it is like going sideways, like the volatility is almost the same. We're not seeing a really wide candles, and we are not getting a huge red candle followed by like a huge green candles, and then like popping up and down in consecutive weeks. So I mean, it really like makes the difference, and I think it's really worth to notice the volatility expansion too. Definitely Motorola's volume is not really that gigantic, really that parabolic in terms of volume, but still we're seeing the increase in volume near the high, near the top of the move. But for Qcom, the trend is much cleaner on the weekly time frame versus daily. On the daily, there are many areas that it breaches 20 MA. Yes, I think this is also one major takeaway or the observations from the Qcom's uptrend, that it never closes below the weekly 9 EMA all the way up. And I also noticed, I mean, many true leaders never violate the weekly 9 EMA, or maybe like the 10 SMA, or I don't know, any fast MA or SMA or EMA, or I don't know, whichever MAs you use. I believe, I think they all shows a similar conclusion, like the real trending leaders never violates the weekly 9 EMA. I think it's really simple and powerful, but at the same time, it's like definitely easier said than done. Really hard to follow. Really hard to sit tight when a stock is like already moved up for like 600% from the lows, and like it's looking a little bit tired. It's looking a little bit losing the momentum, and then eventually like goes further higher for like 300%. Like I believe back here, every reversal, every dip looks like it's the top. And I believe during these times, like a lot of the peers, like some stocks would definitely, the weaker names will look pretty bad, and you'll probably think that is the market is going to top because it's like going up for such a long time. For right here, yeah, maybe like a Nasdaq is already like trending higher for such long. Back in 1994, until like right here, like the late 1999, it just looks really extended. I believe like a lot of people like, I don't know, maybe think it's going too high. Like some people buying down here and think, oh, probably it's the place that I should book the profits or not. I don't know. And then the market continues higher. And then I think the ones who sell it in the middle of the trend or like never catch this rally would really like buy the dips here, or maybe in the late stage of this uptrend, like the blow offs, like the really late stage. And then we got the reversal. But with that said, like if you just follow the weekly 9 EMA, like to me it's the weekly 9, but it can be whatever it is. Like the stock never violates it. And actually I have a few more observations on the chart, but I'm gonna leave it to you guys. But the three that I mentioned just now, I think is the most important and the valuable ones. And yeah, and it's only based on one single chart. Like imagine if you scroll through the charts, scroll through maybe hundreds, maybe not hundreds, maybe like 10, 20, 50 charts, like how much you can learn, from them. And also don't forget to to study the downtrends too. Like apart from the uptrends, it's also very good and very valuable to study the downtrend too. One is for the shorts, another one is staying away from the bear markets and really understand when and where should you be like looking for the turning point and looking for the upside, like we're at the end of the downtrend. So I mean, if you take a look into SMTK, the weekly never violates the 9 EMA until last week. What could it imply? I don't know. Okay, I think last thing. I mean, no one knows whether this would be the real top. The end of the AI bubble or the AI bull market. But if you're looking for the downside, so QCOM tops and then it loses the 9 EMA and it spends almost like 3 months before the real stage 4 downtrend starts. And at the same time, like you can also see there's other names like the Motorola is still going higher. Like it keeps going higher with the market. And Microsoft, yeah, Microsoft also like after it tops, it goes sideways. Gradually pulls back into the 50 weekly EMA and then trying to snap higher but failed, and then we got the gap down and flushes lower. I think it's at the same time with the market. I think with the weakness with the reversals on the Nasdaq and also the general market. I mean, look at how impressive this Microsoft bull run has since this breakout on 1994. It serves the 50 weekly EMA for like 6 years. It goes up for like 2,000% in 5 years, 6 years. And so this is the largest market cap stock back then. And what is the largest market cap stock right now? So Nvidia, we lost the 50 EMA actually in 2025. But I will argue that the uptrend is still pretty intact, and this thing is up around 1,200% from the 2023 lows. And actually, I don't know, if you focus on Nvidia in the previous weeks, in the after May, it tops in early May. So it topped earlier than the Qs. And we got a pullback. Now it's shipping higher. So what if Nvidia fails this breakout? If Nvidia climbs higher and then eventually lost maybe the 9 EMA weekly, even the 21 EMA weekly, or maybe the low of the breakout weekly candle, I don't know. And together with some weakness from the previous leaders like SNDK, MU, what would this suggest? The volume is too low in my opinion for indicating the May was the top of Nvidia. Yes. So you see, you gradually will form your opinion, and it doesn't matter for whether it's right or wrong. But yeah, we don't see like a huge volume expansion on Nvidia back in May. And one thing that is a little bit concerned to me is that the market is getting more and more bullish on the AI technologies. Recently, I starting to like come across more and more contents or opinions about like how this is only the start of the AI interventions or the applications or the potential use cases on AI, and especially after this dip. I mean, I won't take that too serious. Like, I always wanted the charts to prove itself first. So, but we will see. And the market won't like crashes. It won't crashes in a day. It won't crash in a day, and we would definitely see more signs before it really starts a downtrend, or really turn lower. But one thing that you can also notice is like the Qs, and like for every dip in like a correction, generally they occurs right after an extension, but not when it's forming a flat base, not when they're going sideways. But definitely there's some examples of that. 2007 financial crisis. This is the 2018, probably the trade war. I think this should be the trade war. And this is also the failed breakout, trying to break out from this base, but got a gap down. And this is the extension. This is also the extension. This is the failed breakout. This is the failed breakout. Right now, I don't see any like extension or like a failed breakout type of structure. So, I mean, it's really hard to tell. But as long as like the market didn't show me the danger signs like the extensions and failed breakouts or the increase in volumes and the increase in volatility too. I think it's still too early to say, and also we'll like the previous the history only gives you some ideas on the market, but not really. The history won't directly repeat itself. So I mean, at the end of the day, I think the individual stocks it's gonna show us, and that we really shouldn't just looking at the past and finding some patterns and then like over exaggerating it. So actually, I think no, the past few days not really getting much traction on the long side. So probably less is more. I think in the coming days, unless the market really proves itself. But I really think it takes some time. And yeah, watch for the failed breakouts and yeah, be open-minded. Like you can, I think we are still in a pretty intact uptrend, and it's definitely not smart to get to the top, and the market can go like much more further up, further higher than you can imagine. And don't try to like front run the crowd, like to be smart, to be standing out from the crowd, and I don't think that's a smart idea. So thank you guys for coming, and we will see you in the next one.